Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special housing report brought to you in association with Bank of New Zealand. Today we look at figures from Quotable Value on property values in February. Now these are slightly different from the Real Estate Institute's figures. The Real Estate looks at simple house sales data for February. Quotable Value looks at the actual value of houses sold in that period, compares like with like from a year ago and works out what property values, rather than just prices, have done in the last year. Quotable Value says that in February prices improved just a tiny bit from January across the country. However, they still remain down 1.7% from a year ago and are still 5.6% below their peak in 2007. And you can see what happened to prices here going back to 1970. We obviously had a boom in prices from 2002-3 to about 2007, and they've been coming off, bouncing back and coming off again through 2010. However, Quotable Value points out that it is really a two-tiered market at the moment. There is growth in prices in central Auckland, but not necessarily the fringes of Auckland. Higher wages or after-tax wages for those people on high incomes and immigration, both internationally and domestically, is obviously driving demand for housing in central Auckland. And of course there's a lack of supply, with a lot of buildings out of action because of the leaky buildings issue. However, in the rest of the country, particularly in the provincial areas like Hamilton, Tauranga and some of the provincial cities, prices are still falling according to Quotable Value. Certainly the dairy price boom hasn't translated into spending in those provincial areas. Many farmers are repaying debt. To give you an idea, Christchurch values before the quake, of course, were firm according to Quotable Value. We don't know what's happened since then. Prices were firm too in the Hutt, but down in other parts of Wellington. Hamilton and Tauranga are seeing falling house prices. So, what happens now? How is the market shaping up? Well, in the last couple of weeks, we've seen some action with fixed mortgage rates dropping for all of the banks. And now everyone's waiting for the Reserve Bank decision this Thursday on the official cash rate. That's important because if the official cash rate is moved or cut, as many people expect, that could translate into cuts in floating mortgage rates, which many people are on now. So that's an issue to watch in the housing market. Will those cuts in mortgage rates help boost demand? Certainly, home loan affordability is back to levels we saw in 2004. But many people are nervous about their jobs in the wake of the earthquake, and the economy seems to be going into a double-dip recession of some sort. That may contain demand for housing and therefore prices in many parts of the country before then. I'm Bernard Hickey. That was a special housing report brought to you in association with Bank of New Zealand.